Welcome to this 5th tutorial video about using RealTest. In this video we're going to create a simple mean reversion system and look at the challenges of creating realistic backtests when using limit or stop orders, and also allowing for things like commission and slippage. In our previous tutorials we've looked at a number of breakout and trend following systems, but we're now looking at mean reversion, and that's a much more short-term thing. It's where price goes to a short-term extreme and is more likely to snap back to around about the average price. So if we take a look, for example, at this chart of Apple back in 2020, we've plotted a very short-term moving average, this red line here, just 5-period moving average, and above it and below it a 1 ATR away Keltner channel. And you can see that because it's such a short-term moving average, price tracks within this band quite well. But when you get an extreme, for example, this bar here or this bar here, price closes just outside the band, then you've got a high likelihood that price is going to snap back on the next bar. And we can make it even higher likelihood by looking for occasions like this one where price closes outside the band and then makes a further drop below the low of that day, and then it's very likely to then rally and close higher the next day. So that's what we're going to look for in our simple mean reversion system. So let's start turning that into a script, and I'm going to start with a lot of it pre-built and explain what's going on here. So unlike our previous systems where we were using the S&P 500, we're going to use the Russell 3000 here, and we're using the Russell 3000 current and past from Norgate with the constituency for the Russell 3000 so that we can make sure we're including just stocks that were in that index and also delisted stocks. And we're going to start from the 1st of January 2000. And then we're going to have a parameter, the number of our positions, and by default we're going to make that 10 positions that we're going to take. And here are what we're calculating for our mean reversion variables. So we've got the fast EMA that I just showed, an ATR, which is also a 5-period ATR, and those are going to be what we use to actually identify our mean reversion opportunities. And then we've got a number of other variables that we're going to use to limit which stocks we'll actually be prepared to take. So we've actually defined this variable here, universe, and that's a true or false Boolean variable, which is going to decide whether we're even going to consider getting into this stock. So the conditions for that are that it's in the Russell 3000 at the time, that it has an average volume above 100,000, so it's liquid enough for us to trade, that the close is above $20, again we don't want small stocks or penny stocks, that the close is above the EMA 100, so the 100 period EMA, which just means that this stock is generally in an uptrend because this is a long mean reversion system that we're trading, and that it has a percentage ATR above 3%. So we don't want stocks that don't move very much. We're looking for stocks that have at least some good volatility. And now let's look at our strategy. So it's called mean reversion long. It's a long side strategy, and it has a quantity of 100 divided by the number of positions, which is 10, so 10%. So now let's actually define our entry setup criteria. And we're going to first of all require that it's in the universe of stocks that we've just defined, and secondly require that the close of that bar is below the short EMA and then subtract one short ATR from that so that it's below the lower of that channel that we just defined. Secondly, we're going to want to make sure that this is an entry limit, not just a market order, because we want price to actually go further below that, and so the price we're going to specify is the low of the setup bar, and then we're going to subtract half of an ATR from that so that price actually has to dip further, and that's the entry we can take. That's going to be quite a rare condition, but it's going to mean that it's much more likely to snap back. We're going to define that we only want to have num-pos, our variable number of positions we're taking as our maximum number of positions. And now we're going to define our exit rule. So we're going to exit for one of two conditions. The first is that the close is greater than the close of the previous bar. So price has gone up, which would be a good thing when we're trying to do a long mean reversion strategy, or that the bars held are going to be 5. So we're going to have a time stop where if that condition hasn't been met after 5 bars, then we just exit anyway because it's turning out to be a bad trade. So let's test that and see how the results turn out. And as you can see, RealTest is running that very quickly. We've got a fairly nice rate of return accumulating here, and once that's done, which is now, we switch to the results tab and find that we've got a rate of return of 23% and a drawdown of just minus 16%. So very good results from the start. Let's take a look at what that looks like. So pretty nice equity chart. But there is one problem with it, and that is given on this tab here, the setups. So if we take a look at the number of stocks that were eligible for entry, we find that they were very large. On quite a lot of the days it's under 10, but then we've got a reasonably large number of days where we've got a very large number of stocks. Even on this day, just above 290 different setups. And the problem with that is we don't know which of those stocks would actually have hit our entry setup, our entry limit first. And besides which, would we really have wanted to place 290 orders when we only want to be filled on a maximum of 10 of them? So this gives us a lot of uncertainty in the actual results. Whilst this looks like a fantastic equity chart, we actually don't know that we could necessarily trade it because we only want to place 10 orders, and the 10 orders might not be the ones that were hit in the backtest that are going to provide a nice equity chart. So why didn't we hit this problem before in our previous tutorial videos? Well, that's because the systems we looked at before were placing market orders at the open, and so they would always be filled. If you place a market order, then pretty much every time it's going to get filled at whatever price the market opens at. But in this system, we're looking at limit orders, and the same would also apply if we were talking about stop orders. And those might get hit at the open, but the open price might not actually be at the right limit price, so they might get hit intraday. And once you've got that uncertainty, you don't actually know which stocks are going to fill in which order. So just to recall where we're at with this, RealTest takes each day, then it goes through strategy A, strategy B and so on, through the strategies, through the list of stocks, and then decides whether it has entries or exits for them. And we can define an entry score, if we're using market orders, which orders the stocks, and we simply place the market orders for the ones that are at the top of the list, and those will be the ones that are definitely filled. And that definitely happens at the open. But where we've got limit orders, we're not so certain which order things will happen. Obviously we know if they hit it at the open, but if it's intraday we start to have an issue because stocks may drop in price or go up in price at different times of the day. So for realistic backtesting, we need to know what order the limit or stop orders were filled intraday, and that's a problem if, for example, as we saw just now, we have, let's say, 290 entry setup orders, but we can actually only take 10 positions. And the solution is to use something that RealTest has, which is called having a setup list. So we can choose ahead of time 10 setups, which effectively would be the orders we place with our broker. And this means we may not get 10 fills each day, but it also means that we know that these 10 setups will be the only ones that are filled at all. And so we've got certainty, or at least more certainty in our backtesting than if we just placed lots and lots of orders and were expecting the ones that the backtest fills to actually fill in real life. So how does that actually happen in RealTest? Well, we've already seen that we have a symbol list and an entry setup criteria, and the stocks where that entry setup criteria are met effectively create a list which is used then to create positions. Now, if we want to define a setup list, then we can optionally provide a setup score, and that can sort them, and then we provide this maximum number of setups, max setups criteria. And that takes that list and says these are the only setups that we can consider. Effectively, these are the only orders we can place with our broker on this particular day. You can then order those if you wish to by an entry score, although you don't necessarily need to, and you can also exclude certain stocks again optionally by having an entry skip rule, neither of which we're going to use today. So then RealTest takes 3 passes to take a look at that list and decide what's actually going to be in the new positions for that day. And we're going to define a limit, an entry limit or an entry stop level at which those could fill. Remember, we've probably got some positions already in our position list, so those are our existing positions, and the maximum number of positions we can take is either defined by maximum positions or max invested if we're doing different amounts of dollars for each position. And we can also optionally define a maximum number of entries so that you could only have, 5 or 6 or whatever entries per daily bar. And then working from the top of the setup list down, RealTest will work out which hit the limit at the open and will fill those, then which hit the limit at intraday and will fill those, and so on. And it will build up its entries, but of course remembering that during the open or the intraday period we may actually have some exits, and so we actually free up some extra slots in the position list as well. So let's look at how we would actually adapt our strategy to use a setup list. So we're going to change this maximum positions line here, and we're going to change that to max setups. And we're going to actually choose a number of positions, the number of positions that we defined, 10, but we're going to subtract from that the number of open positions that we already have, S-dot positions. So it will only choose a setup list that is the size of the number of gaps or number of positions gaps that we have available to fill. And we're also going to specify a setup score, and we're going to just order this by the ATR percentage. So in other words, we're going to prioritize stocks that have had large moves because they're more likely to give us a nice large mean reversion back as well. Whilst here, I'm also going to make a change to the exit rule, and I'm just going to put a select statement in, and this will give us the ability to see in the trade list which criteria was used to exit. So if C is larger than the previous close, then we're going to label this as being an up day, and if the bars held are 5, then we're going to label this as an exit that is a time stop, and that will just allow us to see what's going on a little bit more. So now if we rerun the test here, and we'll allow that to go through all the dates in our test area, then we're going to actually be just taking a smaller number of setups, and those setups will always be ones that could potentially be filled because we're never going to have more setups than we have available slots. And if we take a look now, we've got a rate of return of 19.5% and a drawdown of about 14.5%. So still nice good results, but more realistic results because we've actually only allowed for positions that can be filled. If we take a look at the equity chart, still very similar. And if we right click it and take a look at the trade list, you'll see that the extra select statement that I added has given us a reason that doesn't just say exit rule, it actually says whether this was an exit on the up day, which is the majority of times, or whether it hit a time stop. In other words, it wasn't working very well. And that's not a bad way to actually examine results. So let's recap the different strategy elements that you can use in RealTest for the various kinds of stock trading that we might want to simulate. So in the simplest scenario, we've only got one stock that we are trading, or one symbol. It might be an ETF or a market or something like that. And in that case, really all we need to do is provide an entry setup to determine when we're actually going to enter that. Simple as that. If, on the other hand, we've got a number of different stocks that we might be trading, then we're going to need to place market orders for those and have a fixed sizing for each, let's say 1/10 of the account into each. Then you simply define entry setup, and it selects which stocks will go into the order, and optionally we can also specify an entry score, and the highest ones will be the ones that are entered. And the maximum positions is what determines how many will actually fill each day. For our second scenario like that, we might choose to have different sizing, perhaps based on volatility, and that's identical, but instead of having max positions, we're going to use max invested to actually make sure that the total invested is not exceeding our account size. Now we get onto the more complicated setup with limit or stop orders, and in this case we want to specify an entry setup which gives us our initial list of potential entries, but we also want to specify a setup list which is done first of all through a setup score which tells us the priority and then the maximum number of setups we'll take from that list starting at the top, and those become the particular orders that we could place with a broker. And RealTest simulates these first at the open and then intraday and so on, and it will decide how many can be filled if an entry limit is hit or an entry stop is hit by looking at the maximum number of positions. It's exactly the same if we wanted to actually specify different sizing. Then we could do the same, but with maximum invested. You can also specify an entry score in this, but there's probably little reason to do so. A third variant on that is to actually have a setup score with limit or stop entries, but then to decide that we're only going to enter a certain number each day. So we don't want to fill everything just on one particular market extreme day. We want to kind of filter how many go through each day. And in that case, we do the same. We can use maximum positions or maximum invested, but we also use max entries to say, let's only have 3 or 5 entries per day, so that we kind of spread out the entries. And lastly, of course, we could specify a number of setups which is actually greater than the number of entries that we have possible. And in that case, we're back to a variant of what we looked at with a problem right at the start of this video, which is that we don't actually know which order they're going to fill in. We can specify an entry score, and RealTest will use that for simulating which stocks will be entered first, but we don't know that that is actually what's realistically going to happen in the market. So in summary, if you're only using market orders, then it's pretty certain that the number of positions we've got available to be filled will be taken from the top of the entry score list, going down one after the other, and they will fill because they'll fill at whatever the market price is. But if we're using limit or stop orders, we can't tell which order they're going to fill in intraday, so it's not always reliable in backtesting, which is why we want to specify a maximum number of setups. There's one other refinement we're going to make to this system, and if we swap back to the script, we'll notice that because we've got a setup here, we're only limiting it to our universe and any stocks where the close is below that lower channel of an ATR below the fast EMA. We might find that actually our setup list includes some stocks that we already have a position in. And so it's a good idea also to add in here that shares are equal to 0. And that means that RealTest won't add to the setup list any stock that we have a current number of shares in. In other words, we have a current position in. So it doesn't try and add a setup that can't be entered, because by default, RealTest won't enter more than one position for a particular share unless you switch pyramiding on. Now, let's finally add a few items to make this even more realistic. The first one we're going to add is commission. Now, on a system like this that trades short trades, and often the expectancy is quite low, and commission suddenly becomes a factor that can be quite significant. So we're going to add in here the maximum of either $1 or 0.5% times the number of shares. And that is the standard commission that a broker such as Interactive Brokers IB will charge. And we can also add in another element which is called limit extra. And this is particularly useful if you're placing limit orders. So a limit order in RealTest will fill if the price dipped low enough just to touch this limit entry here, half an ATR below the low. But of course, in reality, there may well not be enough liquidity for that to fill, and we may find that other people were ahead of us in the order list and got filled. So limit extra allows us to specify an amount beyond which price has to go if it's going to fill. So in this case, I'm going to put 0.1% times the previous day's close. So that means that the price of the bar must actually dip not only down to our limit, but also 0.1% below that in order for us to be certain that we'll get a fill. And if we test this now, run the test, and it goes through, we'll find this does impact results, because we've now got commission added and we've now required that price goes through our limit order before it actually is defined as being filled. And if we take a look at that, we're now down to about 18% return and a 15% drawdown. So if we take a look at the trade list, we'll now see that we've got commission listed for each of the trades, and it's subtracting that when it works out whether we've actually made a profit or not. What would happen if we were also to place a stop to try and limit some of those drawdowns? So we've already got an exit limit, but we could put in an exit stop, and we're going to specify that the exit stop is at 5% below the fill price. And again, With stops, we can't guarantee that they're definitely going to be filled at that price, because when a stop is hit, effectively it places a market order, but price might have continued to move lower at that point. So we can specify for realism a stop slip amount, and again we're going to choose to specify 0.5% of the fill price, assuming that the stop will not execute at exactly the amount we've specified. And when we test that, we'll find that a realistic stop, when simulated in our results, actually does harm the results quite a lot. And now we're getting much closer to what a realistic system would be with a stop. We're actually only returning 6% with a maximum drawdown very similar to what it was. And you'll often find in these systems that execute a large number of short number of bars trades that stops are considerably more harmful than they are good, and that's why a lot of mean reversion systems trade without stops. So there we go. We've taken a look at mean reversion systems that often use limit orders, and we've talked a lot about how limit orders can provide you with too many setups to actually be filled, and that introduces uncertainty. So we've looked at how to define a setup list in RealTest to simulate just placing a certain number of orders with a broker that could be filled. We've also added other elements of realism into our backtest by adding commission in, by making sure that limit orders, the price has to go through them before they're actually filled. And we've also looked at how in a short-term trading system like this, adding stops can often be quite harmful, particularly when we simulate their slippage that's involved with them. I hope you found this video useful. Until next time, thanks for watching.